We saw continued market weakness on Friday with the SPY down 1.28%, and we're coming into a very interesting area here right at the 585 level. This was previous resistance throughout October. You can see we attempted to break out of this area many times in October. Now, since the election, it has become support, and here we are testing this area once again. Our upper dealer cluster zone has proved to be a pretty significant resistance here at the 600 level. Couldn't quite break out of that. Not a surprise after the huge run up that we had after the election. But notice this, there is still large positive gamma exposure concentrated from the 600 strike and above. And so as we've been mentioning in our YouTube videos for the past couple of weeks, market participants appear to be positioning for an end of year run up back into these upper levels. This may take a few weeks to play out. We've still got a couple of weeks left in November, but gamma exposure both on the SPY and the S&P 500 looks concentrated at all-time highs. This looks like a potential area of support at the 585 level. So that's going to be an interesting place from a risk reward standpoint. However, we're not going all in here just yet. We are still in negative gamma exposure territory, breaking the 0 GEX level. And so there is the possibility that we could see a little choppiness and further downside, at least into our lower dealer cluster. So those are the two scenarios, obviously, that we are positioning for. And the key is to position yourself in such a way that you can be profitable regardless of whether the market goes lower over the next couple of weeks or whether we see a rebound over the next couple of weeks. And that is something that the options market allows you to do. And that's something that we focus on primarily is options. We manage an options portfolio in our community Discord, link in the description below. But I love these kind of market setups, where you're kind of here in no man's land. Most market participants have no idea what to do here. But when you're looking at gamma exposure and you can delineate the support and resistance here like we've identified, this actually gives us a great asymmetric risk reward setup where we can put on relatively low risk positions that have high upside potential. And so that's what we love about these type of positions here. We've got large GEX way above us, 3 to 5% higher in the market. We've come down very rapidly, and now we can come in with positioning where we're risking, potentially 1 to 2% on the downside if the market continues lower. But if we get a bounce here, we can make anywhere from 5 to 10% on our risk. And so I love these type of plays, these type of setups. So like I mentioned, we are in negative GEX territory. We closed on Friday, negative 1.3 billion. And if you notice here, just over the last 30 days, this is an area where we have seen lows in the market, intermediate lows in the market and bounces. And the GEX is a reflection of that as well, bouncing up here back into positive gamma exposure territory from the previous 2 times that we dipped down in here. We may have a little bit of weakness early next week, but I wouldn't be surprised to at least see some attempt at a rebound at some point next week. So closing Friday at negative 1.3 billion, a lot of that is rolled off. You can see heading into tomorrow morning, we're actually just under negative 500 million. So from negative 1.3 billion to heading into Monday's trading session at negative 500 million, that is negative 800 million of GEX that is rolling off. So that was heavy 0 DTE negative gamma exposure that rolled off on Friday. I don't know that we're going to head back into positive GEX territory on Monday morning, but it is interesting how much of that negative gamma exposure rolled off. Let's just jump over here to the Qs. The Qs got hit really hard on Friday, down 2.38%. The Qs is actually coming into a lower dealer cluster zone on our GEX dashboard. This is often a place where we can find support or resistance levels. Here, obviously, this would be a potential support level. And you can see the market is much more narrowly focused here on the Qs than it is on the SPY, at least as far as the gamma exposure goes. These purple bars are our GEX levels, and these blue bars are our volume by strike for the trading session. So this is going to be Friday's trading session volume. You can see how heavy the volume was at the 500 strike here on the Qs. Of course, the market overshot that on Friday. And so that's why I think this is an interesting level here coming into the lower end of the GEX data structure. So it's going to be interesting to see how things open up Monday morning. There is the possibility that we could see, some further downside, both, on the Qs and the S&P. We could, kind of fill this gap. But the key is going to be to look and see what the gamma exposure structure looks like after the market opens on Monday morning. We're getting GEX updates every 30 seconds, and so we'll be able to take a look right after the market opens and see what does the structure look like. Let's jump over to the VIX. The VIX got crushed by 50% following the election, going from the lower 20s down to around the 14 level. Not surprising to see a bounce off of that level. That's something we highlighted in a number of our videos last week. But just judging by the gamma exposure data, I'm not so sure that this really has legs to continue back up to the lower 20s. As of today, it looks like primarily the gamma exposure, which is really a reflection of open interest. That's one of the main components in the gamma exposure formula. Most of the open interest looks to be between 14 and 17. And so, yeah, you've got a little bit coming in here at the 20 level. But the bulk of that GEX is here between 14 and 17. And so I'm not sure, just based on this, how much more volatility has to go. That's something we're going to be watching closely this week as well. Now let's just take a look at a few movers and shakers in the market. Palantir, will start off there, up 11% on Friday. It just will not stop going up. It blew through our upper dealer cluster zone. This is where the largest GEX is concentrated, here at the 60 level. So now we're up here at the 65 strike. I'm not seeing a lot of gamma exposure above that level. Volume also very, very low on Friday. Most of the volume was actually at lower strikes here. Look at the 50 strike, look at the 55 strike. And so it makes sense to wait for at least a pullback back into the 60 strike, maybe even the 55 strike if you're lucky enough to get back down to that level. And that's just from a risk reward standpoint. We like to put our long positions on where gamma exposure is increasing at higher strikes after we've had a pullback. To us, that seems to be the best setup for long entry plays, for a move back up into those large GEX concentrations. And so not seeing that setup here on Palantir. It's actually the opposite, right? We're actually above the largest gamma exposure concentration. And so it looks like, we're kind of getting in nosebleed territory, potentially for a move back lower. Next, let's take a look at NVIDIA. NVIDIA down 3.2%. On Friday, we had multiple tags of the 150 strike, or at least attempts to get up to that 150 strike. This has been our upper dealer cluster zone going back to, all the way into mid-October. This 150 strike has been the largest GEX level. Just couldn't quite get above it. Dealer selling pressure obviously kicking in here, not enough buyers stepping up. But I actually like this setup. We've come back in here to the 140, 142 area, which has been a previous support / resistance zone on this side. Coming down into this level, it's actually acting as support. You can see pretty significant volume came in here at the 140 strike. That was at the end of the day on Friday. So this could be market participants coming in. 600,000 contracts, by the way, at that 140 strike. That's something to keep an eye on, how this structure changes coming into next week. But we still have the large 150 strike. We have the large 160 strike as well. So this could be an end of year runner back into these levels. Next, let's check out Tesla. Tesla with the 100-point move, almost 50% in just a few trading sessions, reaching the largest gamma exposure concentration at 350. Dealer seller pressure finally kicking in back down to the 320 level. So we still have the large gamma exposure concentration at 350. But check this out at 400. The 400 strike has been growing significantly over the last several trading sessions. We're going to be watching that. Of course, we got to get back to the 350 strike first, and that's a pretty tall order. I mean, it's got to be a 10% move. So we have to find some footing here on Tesla. A lot of volume, of course, coming in at the 320 strike on Friday. So that could be enough to build some sort of foundation So we're going to be continuing the conversation this week in our community Discord. I'll put a link in the description below. We invite you guys to come on in and say hi. Check out what we're doing there. We have a number of free channels. Also, if you're interested in accessing our gamma exposure dashboard and our option flow analytics, head on over to geeksoffinance.com. You can sign up, become a member, and get access to all the tools that we offer. You'll also get access to our premium channels on Discord, so you don't want to miss that. Thanks so much, everybody, for watching, and we'll see you guys in the next video.